Okay guys, welcome to the 5ers Trading Room as usual on Monday. My name is Ruben, so we will do the trading room together today. As usual, I'm coming to Monday making the weekly forecast. Again, a lot of things to talk about today. Indices are getting down, opening with a gap down, so we're going to talk about it today. Dollar index is breaking out. The dollar is getting more stronger, of course, because of inflation and because of the fear of increase in interest rates. So we're going to talk about those two things today. We will try to see if we can also get some trade live opportunities. I know that on Monday I don't like to do that because I'm focusing on talking about the market and having a weekly forecast and explaining also what happened last week. But if we find any opportunity on the market, I will try to take it. Generally, we do live trading room by trading on Tuesday and Wednesday. So we will see. We will see if there will be an opportunity today as well. Before I start by showing you some chart, let me know if you see me and if you hear me, and if everything is well set up. It's going to be interesting. Hi Ahmawi, hi Alex, hi everyone. Okay, that's great. Okay, let's move on to a chart that for me is very interesting. As usual, a dollar index is pushing to the new high. You're gonna see this on the chart. Okay, never mind, not this. Okay, here we are. Okay, this is actually the dollar index chart. Yeah, actually there is. Okay, that's better for me. So we see last week that the market touched this option line. I didn't expect actually that the dollar was still rising from here. I expected it to rise and getting more stronger, but not so quickly. Okay, I expect at least for the dollar index to get back. You see to the black line that for me was actually the LC path on the dollar index. Okay, you see this option line from June 2021. And with this option channel that was broken with an extended volatility movement here, and I expect the price to get back, after this movement. This one I expected, okay, because it was an overextended movement on my side, technically. So I expected the price to at least get down a little bit more, but the price didn't do that. You see, it respect exactly on this option line, touch again, and I believe that during this week and the next week, we're gonna see a breakout for the dollar index. I think the next zone gonna be 107, something like that. You see, so actually this turn back here was especially because of this top in 2017. We had also this top in 2020, so that's why I expected, I think few weeks ago, that the market will at least slow down. Okay, you see from here we had already a consolidation zone, we had an overextended movement, and then the price went down. So that was something I expected, and we had some good spot on the euro dollar, on the pound dollar to make a buy. But actually here you see it's Canada with a lot of pressure. A lot of banks and institutional are buying the dollar, and we are gonna link this movement because of the indices. Okay, today we see actually the indices down 2%, opening with the gap. We're gonna see the opening together. That's gonna be interesting to see where the market want to go. But you see, this actually movement on the upside is definitely because of the risk on and risk off environment. That's something we see a lot of time, and that we already explained a lot of time. For people that don't know, I will be able to explain it more. But let me know in the chat if you know actually what is risk on, risk off. I like to use these words and this this market explanation of what is happening right now. Hi Pacon, hope you're well. Okay, so that's what actually I think on the dollar index today. Actually, it's a bit struggling. You see, maybe we are waiting the opening of Wall Street, so that's why actually the market is a bit slowing down in the lower time frame. Okay, you see accumulation touching it will. I think it will like stay here during the next 30 minutes until the opening in Wall Street, and then we're gonna see if we will see the S&P getting down 3-4%. The dollar will explode on the top side, and if we see the indices, getting back above, I don't know, let's say S&P above 4,000, we're gonna see the dollar index getting a bit down from here. This is the technical situation of a risk on, risk off environment, and let me know in the chat if you know what I'm talking about here. Okay, talking about the indices, we had actually this gap, you see, at the opening in the futures, because this is the opening of the futures earlier this morning. We had a gap down from, I don't know, it's like 1.6% gap down on the S&P. We had a lot of bad news during the weekend. A lot of traders are expecting an increase in interest rate, not to 0.5 but to 0.75. Okay, so it's an increase in interest rate in US. It generally brings a lot of volatility in the market and a lot of fear. Okay, so it's actually up and down. If I would do something here on the indices, you see we had actually the market is still waiting for the opening. Okay, we have this consolidation zone on the M5, on the M1 as well. We can see that very, very clearly. Okay, the market is you see ups and down. Don't want to go any lower actually, probably because of you see this is the bottom actually that we had on the 20th of May. We're gonna see at the opening. It's still on 20 minutes. We're gonna have some movements ups and down, and then the price will go in one way. If we break below that, there is high chance that we reach the top level of the COVID. This is actually here. So there is a lot of place to go for the indices. This is for more positional traders. Okay, when you want to hold from here to here. But as a day trader, I would be happy to make a short buy from here. You see, the stop loss would be very tight, and my TP, at least we can get back to the opening and close the gap. Okay, generally, when there is a big gap opening like that, traders like to push to the gap, close the gap, and then went down. Okay, so we can do something like that as well. Okay, getting to the gap and then getting down because of the pressure of the market. That's also a scenario that we can have. a small reminder before I'm start trading or doing whatever. I would like to remind that all the trade I'm taking is only from my point of view. Okay, so if you want to do the same, or if you want to trade, keep it to your own discretion and do it for yourself, and also keep a risk management. Okay, so stop loss always, that's something I advise to put. It's very important to make a stop loss in any programs that you can be in the freestyle or even in your personal account. So what we got here, to continue with the explanation, it's kind of very easy to understand, but when we have this kind of sell-off during and a gap during the weekend, so investors are actually selling stocks market and selling stocks and risky assets. Okay, generally stocks is understand as a risky asset, and I want to put it in a safer asset like commodities. Okay, so that's why we saw already oil pushing to $120 and also in cash. Okay, and when you want to put your investment in cash, you go to the dollar. Okay, so that's why you already saw the dollar index pushing up, and also all the pound dollar and the euro dollar pushing down. Okay, so this is quite interesting. Yeah, let's talk about some forex pairs here, but let's start with the euro dollar and then I will go to the pound dollar. You see on the M15 the trend is very bearish. Okay, there is like an accumulation zone from here to here. If I go to the M15, I won't do any buy, okay, because you see the market is already getting down. But if I go to the daily chart, you see we can have some support zone on the euro dollar, maybe not on the pound, but you see actually we have this zone here. That's actually the euro dollar is trading. We have stochastic that's crossed below 20. We already have some type of accumulation, so we can have a movement up. But again, we will have to know what's happening in the indices before, and we're gonna see if we see the S&P opening down and continuing. This is the S&P. If we see today a large drop, so we're gonna see also the euro dollar drop together, I think, with a collateral movement, because all the people will sell their stocks to go to the dollar and buying dollars, so it will depreciate the euro in this type of example. If you go to gold and silver also, this is very interesting. We are actually in a consolidation zone as well. We don't know what to do too much here, but we have a great demand. Maybe not at the bottom. Okay, what I want to do generally is opening a buy at the bottom, so that will be, you see, in this zone, but you can already make some compound. Like I say, and I will continue with my point of view, I won't sell any commodities during the next months. A lot of investors and traders hedging themselves in commodities, and we know there is a lack of supply in oil, lack of supply in agricultural commodity as well, and gold is also known as a hedge against inflation and hedge against risk. So yes, even you see some movement ups and down on the daily chart. For me, there is only way to make a buy. Okay, that's something I will continue to say. Of course, this is a long-term thought, but even when you're a day trader and you have, a mindset of trading and a trading plan, for me, let's say in my trading plan, I won't sell any commodities, I won't sell gold, and I won't sell silver. Even we are in a short-term scenario. Okay, of course there is like some place to sell, like you see, I don't know. Here, when we break out below, when you see this type of top here, you want to sell, of course, in consolidation according to this top. But as a trader, that I have a mindset, I want to the best movement I can have, and still the only thing I will do is go and buying commodities more and more, and I believe that's what we will continue to see. Even you see it's still on consolidation, still already 1 month, almost 1 month, it's already between 1,830 and you see not a lot of points here. We have 370 points. So yeah, but in my opinion, I expect gold and silver to grow and to push to the upside during the next weeks and obviously the next months. And of course, when we are in this type of environment, you should be aware of the volatility. Okay, aware of the volatility. Your entry should be very accurate. Okay, you cannot like open a trade if you don't have any technical entry. Or you should have a trading plan. You should, I don't know, if you want to make a buy, at least making partial buying and not buying at the same place. But yeah, here this would be like an entry for me if the price get down today, making some ups and down movement, and I will enter a buy definitely. Okay, so in more than 10 minutes we have the opening in Wall Street, so we're gonna see indices a bit moving. I believe we're gonna see also the dollar moving. So so stay with me for the opening. We're gonna see if we can, I don't know, take an opportunity doing this type of movement. This gonna be interesting. No, that's not what I wanted to do. Yes, and the dollar is very interesting. We had this huge movement up last week, and you know the market again create this type of consolidation zone. Yeah, with this top here. Yeah. It's going to depend, and we're going to check as well the dollar index. If the dollar index will continue to the upside, so we're going to see the dollar yen again continue, okay, making consolidation zone and then pushing against to a new high. So that's why you should have in mind the dollar index next to you. But again, you have also for this week a good zone to enter some buy. This would be at the bottom here. The stop loss would be very tight, and then the risk reward would be high. So yeah, that's why you have to check the dollar index every time. And the stock market will definitely move the dollar as well. So in 10 minutes, let's check the opening. Let's check what opening, and maybe we can have a more interesting view for the week. In indices, we are in a very tough spot. You see, it can go lower, and all the market will have a high volatility, making a new low again on the S&P and on the Nasdaq and on the Dow Jones. This is quite huge. This is quite huge, and we have a lot of analysts that says, yeah, they expect the indices getting down 50, 60, 80% down in the S&P and on the indices. So of course there will be an impact in the dollar, and if we, I don't know, if from here we go back to the bottom here, that can be here. Okay, we don't know to where we can go, but there are going to be some nice opportunity on the Forex market as well. So you guys should be ready. And maybe an advice I can give you, I hope that already some of you guys already does that, but reduce your exposure. Okay, even you trade and you are a scalper and you're a day trader, reduce your exposure. there will be high volatility movement. You don't want to get catch in a slippage movement or in a lack of liquidity. I know that we have here at the 5ers very great quotes and liquidity providers, but sometimes there can be a gap in liquidity because there is no queries in the market. Okay, and that actually happened in the gap. Okay, all this gap here from here to here happens because there was no liquidity in the middle, and you will see this in any broker. So you don't want to get catch in this type of slippage or gap. So reduce your exposure is one of the advice also for this huge volatility week. Yeah, I think I found European as well very interesting here. Yeah, the European is quite interesting as well. The market react to the bottom demand here after having touch the bottom demand, react multiple times. It takes a lot of time to this pair to react. It's actually two weak pairs that we have in Europe. So you see the market didn't make a huge movement. It was all the time very volatile. It get a lot of time to get down from 0.86 to 0.83. We had you see we had actually this accumulation in a downtrend, and then we break out exactly at the demand. So when you have this weekly or the monthly chart, you see clearly here that it was actually a good zone to make buy. Today you see on the H4 we have this resistance and supply, so that's something I can play around during the week. Opening, making some sell, having tight stop loss, and letting the price down. But the risk reward here will be very small. Like if I want to make a sell here, for example, my TP would be, let's say, at the beginning here of the week. Sorry, at the bottom of the point here, and my stop loss would be above this high. So yeah, my risk reward can be here 1 to 2, 1 to 3. I generally focus for high risk reward as well, but you see, and it looks as well in the daily. It looks like an uptrend. You see, bouncing up, consolidation, pushing up. Again, we make all the time an higher low. Okay, you see we have this low and this low and this one and this one, and actually we have this one. So opening a sell here is against the trend, but it still respect the supply how we are. So I would be happy to find any sell a spot here. Maybe today it can already be a nice setup to sell, in my opinion. Yeah, that's not bad in the European, for example, as well. What do you think of CHF pairs? Let's move on CHF pairs to see what's happening there. Yeah, they are still in the average. Here you see this huge consolidation zone, and then it actually gets back here exactly at the average. We are exactly at the middle in the monthly chart. So if I have a large time scale and a large time frame, I won't do anything right here because we're exactly at the middle. But if I go to daily chart, for example, we have this top here. That may be a point that we can have some seller that react at the top. Okay, so don't enter here, but at the top we can have some sellers coming. And on H4, yeah, this would be the only thing I see. Be ready for this spot in the dollar CHF. Yeah, and you see we are also in the average. So we have high chance also that we reach the highest. And again, the dollar actually is getting stronger. Okay, so of course you see the dollar CHF moving up. If you see the dollar index breaking out, so you will see actually the dollar CHF also to the top level here. So yeah, have a look to the dollar index. I don't know what actually is happening. I'm gonna check on the left screen here. Yeah, still, still accumulating. Not a big movement in the dollar index. I think we are waiting for the opening in the 3 minutes. I'm gonna see. I'm gonna have 3 chart. I will put the dollar. No, that's not something I want to have. Okay, gonna put the S&P. And I'm gonna put the euro dollar. Okay, so that's also going to be maybe the pound. Okay, maybe the pound, because we are actually in the fact in the pound that you see on the daily chart, it's actually close to the low of previous months. It's exactly at this spot here. So we're gonna see some what type of movement we can have. I'm gonna put, let's say, the MPAF in the all, and we're gonna see the opening together. That's going to be interesting, and we're gonna see if we can have any good spot to go. I think on gold that would be for me, if we reach this spot. Yeah, I would find a buy. Let's say the market, the opening, there will be high volatility, high movement. The market will touch, let's say, this demand, and then I will enter the market. So let's check. We have 10 minutes before the opening, so let's put that. Then you can see everything on tile windows. I will put on M5, and we gonna see. And yeah, also on the S&P. Okay. So this holds, yeah, it's likely going to break. See, touch again this. We're gonna see. We're gonna have the opening in the next 2 minutes. Yeah, we have a few more seconds to wait. I won't make any trades before the market opens. Okay, even we see on the M5 here, the market stands this support. I want to see the first reaction, but I think gold might be for me the best spot for me today. We are likely to break out on the S&P, the pound dollar as well. If we see the S&P getting down, okay, the market already open. Let's check that. Yeah, so the S&P is still reacting to that. Might be a trap. Yeah, pushing up on the S&P right now. And if you remember, guys, we had a gap this during the weekend. So the S&P might want to close the gap and then getting down for a short-term movement on the upside. But still, it's only the opening, so let's wait a bit more. Yeah, we are kind of making here. Yeah, the S&P is pushing well right now. Let's check how far I can go. What about the dollar index? Yeah, nothing interesting. Dollar index. To my next screen. Yeah, I would be very happy if gold get back, you see, to this zone. This would be good so far for me. Okay, I believe if we see the S&P, yeah, that's what I think as well. I'm going to explain. We can have here the S&P, for example, pushing up to the gap, and we're gonna see gold pushing down to the demand. You see, generally when the stock market move up, so risky assets is pushing up, and then I'm gonna see maybe gold touching the demand, and that's going for me to be a buy. Let's continue. And you see also pound dollar is a bit moving up with the S&P, and I believe the dollar index will start to get a bit down here if this continues. Okay, so let's wait for that. This is exactly the live scenario of risk on and risk off environment, and you see the transaction, okay, between the risky assets and the safe asset. Exactly. Okay, we see that even it's a short-term time frame. When we are in this type of environment, we can see it even in front on our eyes. Okay, S&P is pushing up, risky assets are pushing up, and we get a short bounce in pound dollar. This is not, you see, it's not a big push, but we are still looking at that here, and of course gold is pushing down. Okay, so it's a short-term connected movement, intermarket correlation. I'm not scalping. I'm checking the live market and the opening of Wall Street on the indices, and I expected the movement also on gold and on the dollar here. So I put the tree screen, and I explained that for me the best spot for me to make anything would be on gold if the price go to this rectangle. So this will not be a scalp, but that's something I would like to hold for a few days. But my entry will be here. So you see exactly on the H4 here. And of course, I'm expecting when the price reach this rectangle a huge volatility movement. So my stop loss would be not tight in this one. Yeah, but you see the S&P is still struggling to break this zone from the morning. Yeah, let's check on the euro dollar what's happening as well. I think it might be the same now. Yeah, it's quite the same. You see, it's a consolidation zone again on M5. We see nothing interesting. The dollar is still holding. Again, I have on my left side, so with the dollar in the chart. Okay, if we don't break if we don't break this top here, we won't see any breakout on in the pound or in the euro. And again, actually, this black line here is exactly the top of last month. Okay, we touch here, it stopped, and then the price is struggling here. So as long as we won't see a big movement, we won't see any breakout on the euro or on the pound. Let's say I'm talking about a huge breakout. Okay, we can have like fake breakout at any time, but that's why I have in my left side the dollar index chart. Yeah. Yeah, that's not so bad. Meanwhile, guys, if you have any more questions, any pairs that you want to talk about, or any questions about what I explained until now, let me know. I would be very happy to discuss. But risk on, risk off environment is one of the main, I think the main context and inter-market correlation that we can understand. There is a lot of big transactions between the dollar, between commodities, and between indices, which is a risky market. And we have to understand this connection between the different type of market assets. This is quite important to do that and to understand. Even you only trade Forex pairs, you should have a look in this type of market situation. It's not all the time like that. Okay, it's generally it's more healthy. The market is less volatile. I think from the COVID, we had a lot of different scenario all over the time. Okay, we had the COVID, then we had the commodity boom, and then inflation started, and then we moved the interest rate. You see, so all the time there is a different thing and a different news that can move by far the different markets. So that's why you have, as a trader, even you only not trading the yen. Okay, I don't know. We have some traders here at the 5ers that only trade the pound yen. That's fine, but you need to understand what's happening in the pound, happening in the yen, happening in the overall global economy to be a good trader. That's something you cannot pass. And if you want to get even better, you should be aware of what's happening in the world. In order to understand, to have to open your mind and be a better trader like that. Even as a day trader, it would be difficult to implement this type of movement, this type of news. This is very important to understand what you do. Yeah, we are approaching actually the zone I want on gold. See what's happening on silver. I think it might be the same as well. Yeah. Wow, actually gold went down even more than that. Gold already break out. You see, that's the thing I wanted to react in gold. Actually, silver is very volatile recently. Actually, we had a breakout on silver already. Okay. Yeah, S&P still is okay, making a new low for the day in the S&P. We're gonna see how far it can go, but it looks like the market will not close the gap here. You see, there is a lot of sellers, cannot do anything. Yeah, not so much movement in the pound. Also, I mean the dollar, okay, pound dollar, euro dollar. Yeah, let's check for something to do here on gold. Yeah, okay, I'm expecting a lower movement. Again, I'm waiting for another big movement on gold. Yeah, in silver it looks like the market already backed out very suddenly. Yeah, let's check on gold. I'm moving a bit fast the time frame, but that's something I do a lot of time. It put me into the context more easier. Yeah, we got a breakout on the S&P already. Yeah, the market is getting down, getting smashed, and okay, we got S&P here, like fake breakout, come back again to the range. We might see maybe gold continuing down. Yeah, we are in the zone on gold. We touch my zone. We can have here two entry. Yeah, that's what I'm gonna do. Okay, I have my first buy here on gold. That's my first touching zone. The market can continue. You see, I'm expecting a huge volatility, so we can have again a lower movement, and maybe if the market come back again to this zone, that's what I'm gonna do, making another buy and then managing my stop loss. But after this huge movement in terms of volatility, you see, even on M1, you don't have. You see, on M1 there is nothing to make a buy. There is no returning situation, but I'm following my plan, buying gold in demand, and we're gonna see. And here, yeah, Bollinger Bands. I use Bollinger Bands to understand volatility, and here it's like you see huge movement in volatility, expecting a movement to get back at least to maybe to this supply. That at least what I can expect when the market have a huge movement down from here. So let's wait, guys. S&P is also in the range. Maybe here a trap. Okay, guys, we are in. Generally, I don't put any trades on Monday because it's a forecast. We don't want to do so much in the market. But when you have a big week ahead of you and you have this type of opportunity, a gap in indices, this type of movement in gold, you want to be in the party. So you go into chart, you go to your The5ers account and you trade. What's happening on the dollar index? Yeah. Didn't break a new high here. Oops, sorry. I want to get a bigger movement, maybe to make another buy here. Okay, let's go. I'm gonna make here my second entry. Yeah, S&P is not making any. Let me know if you got an error in YouTube. I don't know. I get a live message that something not working. But let me know if you still see the live properly in your side. Okay. Okay, we want to get some reaction here. We want to get some reaction, so let's go, guys. Hi, Lucian. Hope everything good on your side. It was an interesting session. You should look a little bit the replay. We had multiple screens talking about risk on, risk off environment. That exactly what's happening right now. Intermarket correlation, risk on, risk off, dollar, indices, and commodities in a triangle. So very, very interesting. And yeah, it's not as usual. On Monday we don't take any trades, but when you have this type of week ahead, you want to be in, and when you have this great plan. So we are in gold after a huge movement in volatility at the opening. Yeah, it's quite moving on our side right now. We should be very patient, as my TP would be more far than here. Yeah. Take your time. See the replay with a cup of tea or coffee. and hope you're gonna get some good insight for the week and for what we expect in the next the next week. I think we're gonna, and also in the next months we had like a big time scale discussion, but we are approaching the end of the session, guys. So I'm not sure if I will make the trading room tomorrow, especially, so I won't be able to show this trade, but I think this is quite easy to understand. We react in a for me a zone, in a demand zone after a big volatility movement. So at least I expect a short bounce from here, and then I will manage the trades and the stop loss and the TP in my favor. But yeah, at least I'm expecting you see here a short bounce from here. And S&P is not doing so far. Yeah, guys, we are approaching the end of the session, so so I will put it in a full screen. But thank you for staying with me until the end of the session. It was quite long, but quite interesting. Again, for people that don't get the whole concept and explanation about risk-off environment, it's one of this actualization will help you to understand the overall market and what actually we are living in. But you should understand the different connection between commodities. So even oil, gold, this is metals, but also agricultural, indices, and the Forex market. Okay, these three actually assets. There is also bonds that we can link to the whole economy, but I didn't want to go in bonds, even it's quite very important to understand in the situation we are right now, but actually understand what's happening in the indices, so indices and stocks, of course, but definitely also so commodities. I repeat, commodities, the stock market and Forex market. When you understand the connection that there is in those three markets, you will get a bigger picture of what's happening in the market. So guys, thank you for being with me today. It was very interesting. I will be continuing by monitoring my trades here on gold, managing it. A bit sorry that I couldn't continue. I could not continue the live, but again, I'm wishing you a nice week. Be careful in the market, okay, guys. Try taking a smaller exposure. Put a stop loss in every trade that you take. Even you're in front of your screen, you don't know. There can be a gap, there can be a news. So yeah, I wish you a nice week, a good success, and see you maybe in 2 days for the next trading room. Goodbye, guys.